The following is a presentation of TFNN. Live at TFNN, The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the April 17th, terrific Thursday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and we must master each and every day. So let's begin our day and our week here with empowering beliefs, my favorite of all time, and that is simply become your own electrician, the electrician of your beliefs. Now, the story behind this and why I tell all this, because I started attending different self-development workshops, listening to tapes, reading books, all that stuff back in the early 80s. And, when I first started attending those programs, reading all that stuff, it was as a student, truly a student, just wanting to learn and wanting to always improve myself, wanting to always improve my mind, my thinking out there. Later on in life, I started attending those programs and sitting back and wanting to attend, not just as a student, but in order to become the teacher out there. And that's how I developed this. So all of this is a summation of everything that I had done. So this is a compilation of taking 10,000 plus hours and really trying to break it down. And because I wanted to be able to perform that brain salad surgery from one of my favorite bands out there, Emerson, Lake and Palmer. In fact, Greg Palmer, I think he still travels around. He does a one-man show. You should go check that out if he's ever in your area. Of course, as I recall, that album was back in the 70s when that came out. But, that's why I tell this story here. And it really is all about telling story, isn't it? Really, each day, what I do for you when we take a look at the markets is I tell you the story of the markets, what they are doing right then and there. We're going to do that here in a moment. But first, I would like you to be your own electrician, the electrician of your beliefs. And the reason is simple. Number one, beliefs have the power to create and they have the power to destroy. And here's the thing. You and I have an amazing ability. We have the most amazing ability because we can take any experience of our lives and we can do one of two things. We can either create a meaning that's going to empower us, which in many cases can save our life. It'll take us to places that we never even dreamed of. Yes, even beyond our dreams. I always, Bubba Watson, who won the Masters out there, one of his best quotes, I don't have it here perfect, I don't have it exactly, but he was quoted after he won the Masters. He said, when they said, how do you feel about this or something like that, this was 2 years ago when he won, he said, I hadn't got that far in my dreams yet. That's what I do mean, is that when we can create meanings that will empower us and take us to places we never even dreamed of out there. Or your other option, and a lot of people, many people do this, they go ahead and take an experience, and even if it's a negative one, and they go ahead and create a disempowering belief. And that gets you into the doldrums. There's nothing that's going to be beneficial that's going to come from that. And what I always like you to do, what I've learned by observing, by watching, by attending these programs, is that, and the beauty about the markets that we trade, and this is why you really have to understand this concept out there, is because there is only one thing that we can control in life, and that's the meaning we give to something. Right now, I can guarantee you there are bears out there. I'm not talking about the grizzly bears, okay, or the polar bears. I'm talking about the bears in the markets. There's somebody right now that sees this event, the markets where they're at, as a selling opportunity. And then there's folks like myself right now. I'm a bull. I'm long in this market here. We're each taking a look at events. One sees it as a selling opportunity, one a buying opportunity. Each of us are giving certain meaning to it. I'm going to go ahead and I'm going to share with you the bullish side of why it is that I'm bullish out here for the short term. I believe this is a counter-trend rally. I believe it was enough to go ahead and take a trade on. You see, our beliefs, our meanings that we give to events, whether it's statements, criticisms, whatever it is, only you and we are the ones in control of it. It doesn't matter who told us whatever they told us. You and I are the ones that are in control of it. And when you really think about it, the reason why I'm spending so much time with this here is because if you can really grasp this, if you can teach this to others, this is the summation of all of these books and services and everything that are out there. And it's really cool Because when we really think about it, what we can or cannot do, what we consider possible or impossible, it is not a function of our capabilities. It is more likely a function of our beliefs about who we are. And that matters for the following reason, because it applies to each of us out there. And that's this. All of our breakthroughs begin with a change in our belief structure, our belief system. That's why I say you want to become your own electrician. Because the question is always, how do you change it? Do you see this? With personal breakthroughs, it doesn't matter where you're at, doesn't matter how great life is, you're always striving for more. So we're always looking to break through. The markets are always looking to break through. Whether it's to the downside or the upside, they're always looking to break through one direction or the other. Now, the most effective way to go ahead and get our brain to break through something is to identify what's your weak link out here. We always take a look at weak links in the markets. Figure out what your weakest area is, and then go back and associate massive pain to continuing with that disempowering belief, because that is what stops us from taking action. We've got to believe at our deepest level that disempowering belief has cost us in the past. It's costing us right now in the present, and if we continue with it, it will only bring us pain in the future. That is no way to live. That is what's referred to as the Charles Dickens process. And knowing what you don't want, that is just as important as knowing what you do want, because you got to compartmentalize what you don't want. You got to put it in a box. You got to gift wrap it and give that to somebody else or send it off to space out there. And then you want to know what it is that you want, and you need to have strong reasons why out there. And you want to associate tremendous pleasure with adopting that new belief system, folks. Maybe it's a trading strategy. Maybe it's whatever it is that you need in your life, because at any moment, and this is the key, at any moment, a decision that you're going to make can and will change the course of your life forever. It might be the next person you stand behind in line. It could be the next person you sit next to on an airplane, the next phone call you make, the next phone call you take, the next movie you see, the next book you read, the next workshop that you attend, whatever it might be. Any one of those things could be the single thing that opens up the floodgates that all of us have been waiting for, folks. So please have a great weekend out here. That's the end of my show. I'm just kidding you. We're going to go check out the markets out there. But as you know, the markets are closed on Friday. So that means each of us here at TFNN will be back with you on Monday. But take what it is that I just shared with you. Try to grasp that. Teach that to your kids as you're around friends and family this weekend, especially if you find somebody that's struggling. Because you, too, can be a teacher out there. We're all teachers when we really come down and take a look at it. Right now, we've got the Dow. It's off 15 points. The S&P is down 1. NASDAQ is off a point. Russell 2000 slightly red off 68 cents. NASDAQ 100 off 3. New York Stock Exchange down 74 cents out here. Our call number is 877-927-6648. I did call out earlier and said, release the hounds. And those hounds being the bulldogs in the marketplace. This market should move higher throughout the day out here. We saw the liquidity gauge. We took a look at those earlier. They were pointing to, hey, if that's all that the sellers can give to this market here, that was not enough. Now, let's start off. Let's take a look at the weak link out here. You've got the NASDAQ composite. Now, the NASDAQ composite, if you're watching us on Tiger TV, I've gone ahead. I've separated my screen into 2 different time frames out here. That way it's helpful to understand what's going on multiple time frames. On the top portion of my chart out here, it's the weekly chart. If you're listening on your radio or your mobile device at tfnn.mobi, we appreciate that very much. Remember, you can catch the archive of this show on Channel 10 out here. So the weekly chart, if it closes today somewhere right around 4,000 and 85, 84, somewhere right around there, that'll be a hammer candle that'll form. Right now, it's not a hammer candle. That's okay. It's still bullish out here. It's got some resistance right around 41, 42 out here. I expect that to be the area where the counter trend rally inside the composite ought to take us to. However, if, on the other hand, this rally ends up being more than just a rally, and that is a potential out here, and we see on a weekly chart, if we see a close above last week's high, which was 41.8519, it actually sets up a new buying opportunity. Now, unfortunately, that buying opportunity is going to run into resistance here, and that's that shooting star candle from the week of March 24. So in order to really get legs out here, it needs to close. The composite I'm referring to would need to close about 43, 44, 39. At this stage, I still believe it's a counter trend rally. On the daily chart out here, the bottom of the screen, what took place here? This week, we saw price push down and run right into that red line on my screen. That was the red line drawn in the sand out here. That red line was your 200-day exponential moving average out there. That has held as support. We've seen a bounce on the daily chart. You need to see a close above 41.07. That would be a nice and bullish. But again, 41.74 or so, that's the 200-period exponential moving average. That may act as a resistance level. But that's what's going on in the weak link of the market out here. Let's go take a look at what's going to run through all of these. These are the Rhodes momentum indicator signals that are inside the market. We're going to take a look at the Dow Jones Industrial Average out here. Let's go find the bulls and the bears. Let's see where they're hanging out at. Right now, the Dow is trading out at 16,406. The resistance area here, now the Dow is just in what I call the cautionary zone out here. It'll get over the cautionary zone if it gets above this little shooting star that it also formed. This is the week ended April 7th out here. The high of that session is 16,631.63 out there. That is the level of resistance. On the daily chart out here, it's in what we call buy mode territory, at least what I call buy mode territory out here. And that is, it's right now trading out 16,394. It too has resistance. That's the bearish engulfing candle from the exact trading session of April the 4th. So that's resistance. A close above that becomes very bullish for the Dow. That level again, 16,631.63 out here. Let's go take a look at the Let's take a look at the transports. We don't look at the transports too often, but let's go ahead and do that as we speak right now. We've got the Dow Jones transports. They're trading out at 75.98. That's up about 7 points here today. Is there anywhere the bears hanging out here? So the bears hanging out here had a bear sash candle last week. That says that, therefore, resistance should be the high of the prior week, April 7th. So its resistance level, 77.1591. You're trading at 7,600. You're trading up at the top of the session right now, a close above. And the transports, here's the thing about the transports. The light blue area that you're looking at on my screen, that's what's called super bull mode. Now, that's the weekly chart. Super bull mode in the transports. They've never given any kind of a sell signal out here on the weekly, on the daily, anything whatsoever out here. So that's inside the transports. At the moment, let's go take a look at the NDX 100. Let's go see what it is doing here this morning. You got the NDX. It's trading out at 35.22. It's off 10 points right now, down about 0.3% out here. You know, the NDX 100, that's been struggling. What did price do? Like the composite got down to the 200-period exponential moving exponential moving average on the daily charts. It never truly got down to that level. It was close to it, and that was on April 15th on Tuesday out there. Still, this is where the weakness in the area. It's going to find resistance at about 35.57.90 or so. It's trading at 35.21 right now. Let's take a look at the Russell 2000. Let's take a look at the New York Stock Exchange. New York Stock Exchange here yesterday gave us a bullish signal. It's important for the New York Stock Exchange to stay bullish today. In order to do that, it just simply needs less than 380 net declining issues. It can have declining issues today. As long as it doesn't exceed 380, it's still bullish. Means the Bulls have a chance. 877-927-6648. Dow's off 33. S&P down 3. We'll be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing. But what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow is off 34 points right now. S&P is down 3. Russell 2000 has turned slightly green out there, 19 cents the upside. It's 10:24. It is a terrific Thursday. Again, thanks so much for joining us. Before I went to break, I had the New York Stock Exchange up on my screen out here. Now, the New York Stock Exchange, the wider swath of the market, really helps you to understand the strength or weakness as far as what's going on. Now, the weekly chart, that's the top portion of my screen. Like many of the indexes out here, did create reversal signals, had some follow through as well. Now, the reversal signal came through on the week of April 7th. Shooting star candle. You can see it looks just like a hammer, only it's turned upside down. It is just as strong as a level of resistance as a hammer candle is as support. Now, so that says resistance on a weekly basis, April the 4th, 2012. The high out there, by the way, that is at 10,669.43 out there. That's really the resistance area. Now, what I also want to show you, though, is even the damage of last week never turned the New York Stock Exchange down. Never turned it to anything. The light blue colors on my screen out here, they represent that we are in a strong bull mode. In fact, what I'm going to do here, I'm going to go ahead and put the monthly chart. So the daily chart out here says, hey, be cautious. Now, what the New York Stock, let me go ahead and now blow this up a bit. What the NYSE did 2 trading sessions ago on April 16th, it formed a hammer candle out there. So here do you want to talk about the clash between the bulls and the bears? You want to talk about where lines are drawn in the sand out here? Look, on the weekly basis, you've got the cousin right? You got the long-lost cousin out here, the shooting star, so you got resistance up there. At the bottom out here, which formed on the 16th, 2 trading sessions ago, you got a hammer candle. So that's an important low. Just, by the way, that low on the New York Stock Exchange, let me give that number to you, 10,435.83, just as the high on the weekly base for that shooting star candle. And yesterday you had a gap up. So you had a gap up, confirming a nice hammer candle out there. Says it really wants to go take on that high. Now, here's what I'm going to do for you. I'm going to do it for me too, right? All I ever do, and I'm always willing to change my mind when the data provides itself to me. That's all I'm doing. I'm telling you a story about the markets and what their message is, and I'm doing it live, active as of 10:26 out here, and I am agnostic with regard to the direction. Hey, look, I'm in a long trade. I'd like the market to go up, but I've got stops in place, and I've got an exit in place. The market's going to do what it wants to do, regardless of what it is that I think it's doing, right? But if we take a look at the monthly chart out here, and take a look at where we're at for the month, yes, look, we've still got a lot of time left in the month. Anything can happen out here. But if you look at this chart here, this monthly chart, can you find anything bearish about this? If you're watching this on Tiger TV, what is it that you can see in this chart here on the monthly time frame, which is going to trump the weekly time frame, which is going to trump the daily time frame, which is then going to trump the 120-minute chart out here? Is there anything out here that you can see that's even bearish, even slightly bearish? Oh, the answer is yes. Let me show you what that is. Now, very bullish mode that we're in right now, but what did occur here this month? Which has not occurred. Let me just try to look back, see if I can find the last occurrence on a monthly basis of this. The last occurrence. Oof. The last occurrence took place right here. Oh, that's interesting. That took place in May. That was in May of 2011 out there. Interesting. So and how about that? That did lead to a sell-off. So, even you detect some bullish vigor or what have you into my voice out here, and you might be looking at that candle and you're saying, hey, no way, Steve, I don't see what it is you're looking at. Let me blow it up on the screen here, and I won't lose May of, and folks, I was just I didn't even know that when I and, you know the sell in May rule, right, out here? In any event, so is it a coincidence? I don't know. We'll check it out to make sure that it's correct. Here's what occurred this month. Then we'll go back and we'll actually take a look at May in 2011. What has actually occurred this month is prices exceeded both the high and the low of last month's candle out here. So that is the wick of the candle that we're taking a look at. Last month's low out there was 10,270.209. This month's low that we've seen is 10,271.36. So we've clearly gone ahead and exceeded that. You can easily see here that we've exceeded the high of last month. All that needs to happen, this is what's referred to as a potential key reversal session. All that needs to happen is you need to see it close below 10,538.44. 10,538.43 actually qualifies as a key reversal session. Not one with a lot of oomph behind it, but still one. Now, key reversal sessions require 3 things. When you see them on a monthly chart, it does mean you've got to pay attention. Now, we're not there yet, but we know what it is that we need to be looking for. They require 3 things. Number 1, we just described really 2 of them, right? The intra-period high and low, the intra-month high and low needs to exceed the prior candle, needs to close in the opposite direction of the trend, and you've got to come in from an extended condition. Hey, relative strength index is up in that 70 level. It was extended back here in the month of December out there, so it qualifies as all those things. That's very subtle, but very important for us to be paying attention to as well. Of course, if it does not form that key reversal session, it's upward and onward. 877-927.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. TFNN is back with another Tiger Dollar special, and as part of this promotion, not only can you receive up to a 25% bonus on whatever you spend, but you can also gain access to a 5-part live webinar series with Tom O'Brien taking place the week of April 28th. Each morning during the week at 8 a.m., Tom O'Brien will walk you through how he sets up the market live and digest the previous day's trading action while analyzing overnight markets abroad in order to anticipate what kind of trading day to expect. Each 60-minute live morning webinar will be archived by around 9:30 a.m. that very morning, so that if you can't attend live, it'll be available for your viewing pleasure on demand whenever you're ready. Tiger Dollars can be used for any TFNN newsletter or service, and they never expire. So now is a great time to lock in extra savings on all TFNN products. Don't miss out on Tom O'Brien's 5-part webinar series. Get your Tiger Dollars today with up to a 25% bonus on whatever you spend before this special is over by visiting TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Kind of a flattish market out here. Dow's off 15. S&P is flat. Composite's up 13 points. That's pretty strong, though. You got the composite and the Russell 2000 now leading the charge, so to speak, to the upside out here. So that's rather bullish when the bearish, when the weakest stocks out there just simply are leading the charge out here. Hey, folks, tonight at between 5 and 6, we've got the Ask Bill show out there, Bill O'Neill. Yeah, you still have a chance to send in your question if you got a specific question for Bill out there. That's going to be on from 5 to 6 on the Tom O'Brien show. So great opportunity, always great opportunities on the homepage of TFNN.com. One of those opportunities being the Tiger Dollar promotion program that we have. We do not have that very often. So all the details are out there on the homepage of TFNN.com. Sign up for Tiger Dollars. You get a 25% bonus if you're a subscriber to any of the services out here. It's a great time to do that. Go ahead and load up on that. And if you're not a subscriber, maybe you ought to think about becoming a subscriber. You can test drive Mastering Probability. That's my newsletter service. You get that. That comes with a 30-day unconditional money-back guarantee. You put down a deposit for 30 days or less out there. If you pay for something, you pay attention. It is really as simple as that out here. So anyways, by the way, that May 2011 timeframe, that was not a key reversal session out there. They're hard to do on a monthly basis. Last time we actually had one, by the way, the key reversal session, that was in October of 2009. Yeah, it was also a bullish engulfing candle, but it was a key reversal session that seemed to have marked a pretty good low out there. So we'll certainly be paying close attention, and that's where you need to understand the nuances of some of the candlesticks and reversal signals that are out there inside the marketplace. As long as I'm on this monthly chart out here, let's take a look at the monthly chart for the composite. Let's go see what it has done at this stage. Let's go see what the formation of its candle looks like out here. And on the monthly chart for the NASDAQ composite, even though there was some early damage done here through last week, it's still showing that it's, quite frankly, in extremely strong bullish mode out here. So that is the current message of the monthly chart for what is the weakest element inside the market. The NDX 100, I'll pull that up on my screen as well. Let's go. So we'll do the NDX and we'll do the Russell. And then we'll go take a look at the ETF structures out here. Let's take meaning the index ETFs for you. Russell 2, NDX 100, also the same. Still a nice, strong bull mode out here. Let's take a look at the Russell. Give me a moment. Where are you? Here we go, the Russell 2000. Let's go see what it looks like on a monthly chart out here. Monthly chart. Now, the monthly chart here for the Russell is one worth certainly paying attention to. It's one that might carry with it the most bearish. Even still right now, it is bearish. Why do I say that? Well, last month, the month of March, it formed a doji candle. Doji candles are very important. The Japanese have an expression, the leaves are falling off the tree. And for what that means here is that would mean that any close below last month's candle session, which the close there was 1173, and you're trading at 1136 right now, so it's got a lot of giddy up and go. Any close below that suggests that that's the first signal. It's a monthly chart out here, so you'd really want to be paying attention to it. That would signal that that a correction could be beginning, and that's what the Russell 2000. So it's got some competing patterns out here. I'm just going to pull this back, see if I can find any other doji candles out here, any real doji candles, and follow through to the downside. And let's see here, nothing that is sticking out at me on a monthly basis, so I'll just simply stop looking. We won't waste your time. In any event, let's go take a look at a couple other things in the market. Then we'll take a look at the ETF structures here. Let's go take a look at let's go see what's going on with the VIX. Let's try to do, instead of summarizing at the very end here, let's try to figure out what's going on. What is it that you want to be paying attention to today? So one of the first things, the New York Stock Exchange, let me go ahead and pull that up on the my screen out here. What the New York Stock Exchange did yesterday, it turned the price oscillator and it turned the volume oscillator up above the zero line. When it does that, what that's going to do simultaneously is it turns, you can't really see it that clearly here, but it turns the summation index up. This is sometimes a little bit of a lagging indicator out here. It's not going to catch the bottom. It's not going to catch the top from a short standpoint. But what it is going to tell you, it's going to tell you the underlying strength of the trend out here. That turned up. It's up above zero. It'll stay above zero as long as there is not 380 or more net declining issues out there. As we speak right now, if I go take a look at it, give me a moment here to flip over. You got 373 net advancing issues out there. You had a nice hammer candle that occurred here on the 15th. You had a nice gap up yesterday. That was confirming it, confirming the move higher. You're trading now inside of the swing point from April the 4th out there. The low is 10,505. This suggests that the New York Stock Exchange wants to go test its highs. It couldn't bust out the lows, right? If you can't bust them down, it tries to do what? It tries to bust them out. What do I mean it couldn't bust them down? Well, it couldn't bust them down. You had Vladimir Putin Day on March the 3rd, the low out there, 10,276, 13. That was tested here, a little doji candle on March the 14th. You formed a hammer at another test of that level. Strong bullish. That bulls are protecting that level. For whatever reason, I can't tell you. I can just tell you that they are. So this is a strong move inside the New York Stock Exchange. The wider swath of the market. You trade inside a swing point. I don't care what kind of volume it is. Hi, look, if you're trading it with volume, says you want to go test the highs for sure. Lighter volume, okay, could be a retracement level. Let's take a look at those potential retracement levels then from high to low. Right now, you're above the 0.618 retracement level. Says 10,584 then would be a likely target. I would say it wants to likely go test the highs, 10,669. Probably into next week sometime. So that's the New York Stock Exchange. That's one of the things we want to be watching for. What's another thing? We want to go take a look at our liquidity indicators. What are those? Well, you've really got two that you really want to use. One being the euro, Japanese yen. That's the ultimate in liquidity indicators. That's the carry trade that goes on inside the market. That's how the market moves higher on lighter volume. You put cash out there that needs to be put to work. It's done through this currency pair. And in this case here, it has rejected the lows out there. It has rejected the bottom. It did not do it with a hammer candle out there. I would have preferred that. But what it did was price came down to the breakout session from March the 6th, and this market doesn't truly crater, until we see it close below that level, 140.38. We know that there was a divergence with regard to this currency pair and the direction of the market. It was signaling to us we were going to see a bounce. Right now, take a look at the daily charts. That's really all that's going on. Counter trend rally. How far can it go? Well, the Dow trading inside its swing point high, the New York Stock Exchange inside its swing point high. I say the next test comes at the top of the swing point until the market gives us anything else to look at. Liquidity gauge here says it wants higher price, not lower price. That is bullish. Second liquidity gauge, it is the VIX index. VIX index, if it trades above the 50-day exponential moving average, you're losing liquidity. That's where the market starts to do damage. You start trading below the 50-day, and you closed below it with conviction yesterday. Right now, the 50-day exponential moving average is 1476. You're at 1359. You continue to trade lower. Again, more liquidity into the market out here, and that says the market can move higher. Now, two things occur when the price is below the 50-day exponential moving average on the VIX index. One of two things: a sideways move, like a consolidation, or a move higher. Neither of those are really bad outcomes, but that is what will happen for the most part. And you do not have to worry about the price being the aspect, at least the way that Stevie Son here uses it. Again, I always prove the point on that. Because you can take a look at the VIX back in 2008. The VIX was at about the $58 level. Once it got down below the 50-day exponential moving average, market just kept moving higher. So we take a look at that's how you want to go ahead and use the VIX index. Use it with regard to the 50-day exponential moving average out there. So that's what's going on. That's what you want to be paying attention to. That's what you want to be looking at out there. Let's go take a look at those ETF indices right now. Let's go see what the Qs are doing here. Let's go see what the weak link in the market is doing. It's now trading above its 0.618 retracement level. It's running into a little bit of resistance out here. If it can clear this level of 86.34, that will set up a move to about 86.90. I think ideally what the Qs want to do here, and where your next real potential sell opportunity comes, is when the Qs are able to get back to the downdraft high from April the 10th. That's at $87.88. That looks like that would be the target area for where the Qs would also run into the descending price channel out there. If they can break through that descending price channel, that's bullish, but I suspect that's where we will see some real resistance take place. At a minimum, we ought to see a move up to about 86.90. That's assuming that price can get above 86.34. That's the number. You're trading at 86.31 as we speak right now. Let's take a look at the SPYs. Let's go see what the SPYs are doing. They're bumping their head into the 0.618 retracement level. 186.50 is the number out there. The high so far today, 186.42. So that's where it wants to head to. But really what it wants to do is it wants to go ahead and test the level of April the 10th, that high, 187.17 out there. So that's what it wants to move into. What the SPYs have done, though, is they could move higher, because the SPYs here, even if you take a look at the trend line in the SPYs, that's coming from the high of April the 4th to the high here of April 10th. We got up above it yesterday. Now, light volume, and today is going to be an extremely light volume day, or it should be out there. Light volume. Yesterday's volume, 105 million shares. The day before, 157. We've been trading for an hour and 15 minutes right now. Only done 29 million shares out there. So expect a light volume day to continue today. Let's take it. Monday could also be a light volume day as well, as people maybe take a little bit longer for a vacation. I guess Monday still is, right? You got folks that still have vacations the week after Easter. I don't know what the school schedules are up in the Northeast out there. So we could see a light volume week come next week as well. If we take a look at the IWM, the real weakness in the marketplace out here, if we take a look at its retracement from high to low, That would be going from the March 4th candle session. That high at 120.58 down to low that came here on April 15th out at 108.66. Dead cat bounce, 0.382 retracement. Resistance level is 113.21. The actual high that it's hit so far today, 113.16. If it can get above 113.31, 113.21, that would be pretty bullish out there. Bullish enough to say the IWM wants to try to make a move to the 116-ish mark out there. Let's finish this off by taking a look at the Dow Diamonds. Then we'll take a look at some stocks that are jumping in the marketplace out here, to the upside, to the downside. If we take a look at the Dow Diamonds, so far today, just an inside trading session. They've had two nice days, two, in essence, very wide-ranging moves out here. The Dow Diamonds really trying to give you a nice little buy signal here today. If they can get above yesterday's high, which was 164.03, they ought to move up into I think the Diamonds want to go test the highs, 166.06 out there. Now, volume, it's coming in there very light. That trading session, that high, 10.5 million shares out there. Yesterday, you moved up and closed into it with only 5.8 million shares. Today, you've done not too bad. Volume for the first hour, about 2.2 million, but I expect volume will go ahead and drop off. Let's take a look at things that are moving in the markets. Now, one of the things that we took a look at during the first hour here was Google. Let's go take a look at Google. It's trading down $22 right now, and that is not a good message here for the NDX 100 because of its weighting structure inside here. The reason is that Google tends to continue to, so here's the earnings date, continue. The earnings date is all important for Google. Now let's take a look at volume. Let's see what we have going out here. More times than not, Google will continue to trade in the direction after the earnings release date. Within at least a day or so, will continue to trade in that direction. So right now you've got Google trading out at 533, the swing point. Inside Google is April the 15th, 3.8 million shares. You're trading into it with 3.2 million shares. That says that the low is either going to get taken out and blown away, which is 518.46 out there, or it is at least going to get tested, 518.46. Now, if that gets blown away, that probably sets up price moving all the way back to the last sign of strength out here, the gap up. That would be at the 448.45 to 442.86. That's your October 17th trading session out there. So what's really important inside Google is taking a look at the April 15th low, 518.46. Let's also go take a look at IBM, see what it is doing. So IBM is trading down as well, down $6, down 3.5%. That is certainly taking out the juice inside of the Dow out here. It gapped down this morning. However, IBM has gapped down into its last sign of strength out here. That took place on the trading session of March the 25th. That level is holding. There were 10.9 million shares. Now it's gapped down with pretty good volume, 5.8 million shares. But it looks like that fund is trying to continue to support IBM as opposed to sell IBM. So it has found some of its feet, some of its footings out here. I have a request to take a look at a symbol, which I am not familiar with, so we're going to get familiar with it out here. That's coming from our Tiger's Den. Let's go see. The symbol is GLNG, and GLNG is, voila, Golor LNG Limited in Bermuda. So let's go take a look at GNLG. Give me a moment here. Oh, we're gonna have to take a look at that when we get back from this break, but we'll do that. Right now it's trading at 46.37. It's up 60 cents, up 1% out here. Golor LNG, they are a liquefied natural gas company. We'll take a look at that for J&J in the Tiger's Den. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow is off 6. S&P is up 85 cents out there. Composite up 5. Russell 2000 up 4 points. Leading the charge to the upside. Had a request to go take a look at Golar Liquid Natural Gas. Ticker symbol on this is GLNG. I've got the weekly chart on my screen. I think that's where we ought to just focus in on. The weekly chart really tells the picture here. Let me go ahead and I'll make it a little bit smaller first. We'll take a look at it. It has had a nice move. It's trying to trade up towards its all-time swing point high out here, which was January of 2012, the top of which is 47.82. It's trading at 46.24. What we can also see inside of Golar is it's really been consolidating ever since about September of 2011 out here. So we've had a long-term consolidation pattern. That's the first thing that we noticed. 16-point consolidation in total. And it's going to, it looks like it wants to go ahead and complete that consolidation at least and test the highs out here. Now, it has a confirmed A to B equals CD to the upside on the weekly chart out here. And that's with us starting with the swing point, the A point being July 5th low, $30.51. The B point being the swing point high from November 29th. That's out at $37.83. Makes a retracement down into a low that formed on December 20th, the week of December 20th, 2013. That's at 33.07. Makes the 1-to-1 A to B equals CD with what? A wide-ranging bar. Does that. That was also the B point that was also the bar that took out the B point with volume. Said that what it really wanted to do was go ahead and make higher price. Now, on a weekly chart out here, you can see that the following 3 weeks here traded with inside that wide-ranging bar, and then this week it's taken off topside. That's a continuation pattern. Most Japanese candlesticks are reversal patterns. There's one out there called the rising three. That's what we have on the weekly basis, a rising three pattern that says it wants to rise, baby, rise. It at least wants to get up and test the swing point high. Now, it's coming into that January 13th swing point that had volume of 5.3 million shares, and it's doing it with lighter volume. Now, it's not up there yet. If it takes out that level, and it does it with volume, you then have a 16-point move out here, at least a 16-point move, and then you'd go take a look at the larger A to B equals CD pattern that could be in place out here. If it cannot bust them up, what's it going to try to do? It's going to try to bust them down, and that says that in the case of Golar, it could easily make its way all the way back down to the bottom of that 16-point consolidation. However, this time around, in order to make it down through that level, it should find some pretty decent support at about $41.20, because that was a sign of strength out there on the weekly chart. The daily, so that was March 7, 2014. Let's see where the daily bar came in that had that sign of strength. That was right here. Looks like that was on March the 4th. And so that says 4077, which has 3.5 million shares. So on the short side, I would not look at the 16-point consolidation. I would look at support probably coming into play right around the $40.77 mark out there. That was for J&J in our Tiger's Den out there, so I hope that helps you out. What else do we have going on inside the market? Let me see. What's the big move here other than Google out here real quickly? What else? I got Google to downside, IBM, Alliance Data Systems, ADS. That's to the downside. To the upside out here, moving the market, Chipotle, up $25. SanDisk. Let's take a look at SanDisk here real quickly, see what it is doing. SNDK. The chip sector has been on fire. Looks like SanDisk on fire as well. It's taking on a swing point that gapped up this morning. It's got 6.3 million shares out there. It's taking that on with, already 5.6 million shares. Looks like SanDisk getting ready to form another A to B equals CD to the upside. Folks, have a great week. We'll be back with you come Monday morning. Be safe out there. I look forward to seeing you bright and early Monday. Take care now.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.
Be firm, be fair, be sure, beware. On your guard, take care, while there's such temptation. One thing will lead to another, too late to run for cover. She's much too close for comfort now. Be wise, be smart, behave, my heart. Don't upset your cart when she's so close. Be soft, be sweet, but be discreet. Don't go off your beat. She's too close for comfort. Too close for comfort. Please not again. Too close to know just when to say when. Be firm, be fair, be absolutely sure, beware. On your guard, take care while there